welcome to the latest edition of Breakfast and Learn from HACOF, the Haitian American Chamber of Commerce of Florida. Today we have an interesting topic that will be presented to you by two businessmen and bankers from BB&T, now Truist. They also happen to be my colleagues, Mr. Jaemair Lewis, who will introduce himself, and Mr. Santiago Lopez. Again, the goal of these educational sessions are to help and promote businesses in the Haitian American community, in the North Miami community. Again, thank you for participating in this educational session. I'm going to turn it over to Mr. Jaemair Lewis to introduce himself. We'll then turn it over to Santiago Lopez, and we will at that point begin the presentation. Jaemair?
Yes, thank you. Thank you. Good morning. And thank you to the Chamber, the Haitian American Chamber of Commerce, for having me this morning. This morning we're going to be talking about some critical information regarding growing your small business. But before we do that, just a little bit about me. I'm a small business relationship manager for BB&T, known as Truist Bank. I've been in this role for 5 years, but I do have 15 years overall banking experience. So over the years, I have learned a lot about what it takes to run a small business. I would say it's one of the most difficult jobs in the world, running a small business, running the business. And I have much experience with micro business, as we like to call it, all the way up to businesses that have, at least $1 million, $200,000 revenue. So this is meant to be interactive. I encourage you to engage with us and ask any questions along the way. And we'll be sure to provide the answers that we can on the spot. And for that, and for those that we cannot answer immediately, I will surely encourage you to contact me outside of this session, and we certainly can get the answers that you're looking for. So that's a little bit about me. I'd like to introduce my colleague, Santiago Lopez, to say hello and introduce himself. Santiago?
Thank you, Jaemair, and good morning to all of the ones that are listening or watching this Zoom meeting. My name is Santiago Lopez. I was born and raised in South America, more specifically in Colombia. I came over to the United States when I was 20 years old. Now I'm looking on my 30s, and I've been in this beautiful country for over 10 years. 5 of them, the last 5, in the banking industry. So it has been a great journey. I started as a relationship banker, and then I started moving my way up, learning every day, trying to focus on my goals. And I started learning the industry, and I've been a branch manager for the past year and a half. And as Jaemair was saying, we are here for you, for everybody that is willing to grow their business, that is willing to gain financial confidence and try to achieve that economic success, because that's what we get paid for. And I love what I do, and this session I'm really grateful for Jaemair, who invited me to join, and for the organizers, for Jean, also our colleague. And I hope that you guys take the best out of the information we're gonna provide. And like Jaemair said, feel free to reach out whenever you want after the meeting. And if you have any doubts or questions, or if you want to discuss further on any topic that we're gonna cover today, okay?
Thank you, gentlemen. Thank you, gentlemen. Again, this is Jean Belizaire with the Haitian American Chamber of Commerce. I would like to thank all our members and the board led by Madame Paola Pierre, who's the chair lady of the chamber. And After those introductions, we will have Jaemair start. We'll also have a presentation a video presentation on the topic growing your business. Once more, I would like to remind our audience that this is being recorded and this is being broadcast live. Any objections, please stop. You can stop the participating in the session. But that said, Jaemair, again, please continue.
Thank you, John. All right, so we do have a video aid with us that will go into some detail with some info. But before we begin, I was hoping to possibly get a survey of maybe a few members that we have on the line. I want to hear about what type of businesses you're running and how long you've been in those businesses. So just any volunteers that care to share the name of their business, what they do, and how long they've been doing it? Any takers? No. Okay. Well, let me just say that a lot of what we see in our area here are restaurants, general contractors.
I was trying to chime in.
Okay. Who is this?
This is Carl from Caribbean Media Group. We've been in business for the past 4 years and very excited to hear what you guys have to say today.
Okay, wonderful.
Also a board member of Hackoff. So.
Excellent. Thank you so much. Is it Carl?
Yes. I'm just having internet difficulty where I am, so.
Okay, that's okay. Thank you so much.
You bet.
Caribbean Media Group. Okay. Anyone else? Okay. Thank you. All right. So yes, I was just saying that I have the pleasure of servicing many transportation businesses, general contractors in construction, and restaurants. So as we go through the information, I may use some of those as examples. So just bear in mind that if you do want to share a specific scenario for yourself, you're free to do so, and I'll be happy to share ideas around that. All right, thank you. So we'll begin our first slide right now. Peterson, you can go ahead and play it.
Throughout the business world, there are numerous types of businesses. Some businesses offer a product or service to their customers throughout the year, while others are designed for more seasonal sales cycles. Specific needs vary based on business types, but there are things that all businesses will need to consider. Some of the critical elements we will discuss today are separating your personal and business finances, effectively managing your cash flow, the right technology to keep your business up to date, credit options to consider when the need arises, the importance of insurance, things to consider when hiring employees.
Yes, so that was just a brief introduction. Our first topic will be separating your business finances from your personal. I'll tell you that this is usually the first mistakes a lot of small businesses make. So in the slide, we'll go ahead and see the advantages of doing it.
First, we will start with personal and business finances. As your business grows, creating a clear boundary between your personal and business finances is crucial to not just managing your business, but also financial diversification and stability, complying with IRS regulations, and establishing a professional reputation. If you have not already done so, be sure to obtain a Federal Employer Identification Number, EIN, which is like a Social Security number for your business. Once you've established your business as a separate entity by getting an EIN, sometimes referred to as a tax ID, and business license documentation, you can open a bank account in your legal business name. By keeping your business and personal accounts untangled, it's easier to review your statements and see how your accounts are doing. Be sure to pay all of your business's bills from your business accounts and avoid the temptation to use your business card for personal needs. Many of your business expenses could be tax deductible, like your office equipment, advertising, or employee salaries. However, it's imperative to keep a record of everything you spend and know what counts as a business expense and what doesn't. Talk to your coach at the next break if you have any questions on what qualifies as a deductible business expense, and they can refer you to a tax professional who can assist. It also might be helpful to give yourself a salary by transferring the same amount from your business to your personal checking account monthly. This will help you keep better track of both your business and personal finances. Keeping your business expenses separate will also assist with accounting purposes and be helpful when it comes time to do your taxes. It is also important that you have a separate business credit card that you use only for business expenses. In 2015, credit cards surpassed checks as the preferred payment method for business owners, and about 67% of business owners currently have a business card. Your business card should be in the name of the business, but you will likely need to be the guarantor. Having a credit card is a great way to protect your liquid assets. If there is a fraudulent transaction, funds are not automatically withdrawn from your account. Also, with the credit card's zero liability component, you will not be held responsible for unauthorized charges. Not only do credit cards offer your business flexibility, but credit utilization is a key factor in establishing business credit scores. You should only have a couple of cards, not several. Your credit score will benefit from having one card with a higher limit instead of having a lot of cards. Be sure to pay the credit card bill from your business checking account. Use your card or cards regularly, but do not overspend. Limit spending to a maximum of 20 to 30% of your credit limit. When used responsibly, a credit card can help establish a good credit history and be a stepping stone to a loan, which we will discuss later on. Another great tool every business owner should have is a business debit card. It is a great complement to a credit card and provides 24/7 cash access, ability to make deposits at ATMs, ability to receive cash disbursements, and more. For example, having a business debit card allows you to pay for everyday purchases directly from your account. Similar to a credit card, zero liability applies to fraudulent activity that occurs on a business debit card. Business debit cards can also be given to employees who need to make purchases or deposits, but with controlled spending limits and restricted access to account information. With both a business credit and debit card, you have access to multiple options to help you better manage your payment needs while keeping your personal and business account activity separate. Additionally, while investing your personal savings into the growth of your business may feel natural, doing so could endanger your plans for retirement. Remember, your growing business is not a retirement plan. You need to ensure you have enough funding for your retirement. There are several good retirement solutions for growing businesses, so consider hiring a certified financial planner to help you plan. Now that you know the importance of keeping your personal and business finances separate, it's your duty to make sure the other people involved in your business do as well. It's important for your employees or family members to be aware of your business's status and be committed to the same goals.
All right, so separating your personal super important topic. First of all, I want to say, don't worry if you don't do a very good job. Always the time to start, and it's something that can be corrected with good accounting. Even if you do it yourself, it's something you can go back and maybe audit what you've done and then separate your expenses after the fact. So I would encourage anyone that has not had that practice to start it immediately. It is a common issue with small businesses or businesses that are startups, especially in the scenario of sole owners, because a lot of times we know that you're using, your own personal capital to start your business, your own personal savings. And if you are the only person in this business, it's almost very convenient to, maybe spend money on your business from your personal accounts, your personal debit card, and your personal credit card. But, for the purpose of maybe tax liabilities and obviously growing your business, knowing how your business is performing, it's super important that you kind of start that framework while your business is small. That way, as you grow, you can manage your growth and you can clearly identify what is business revenue, what is the business expense versus your personal expenses. Over time, as you grow your business, it'll become kind of a little bit more difficult to separate those things. So that's why it's early, or it's best, it's a best practice to do so early. I see a hand.
Jaemair, it's me. Sorry, I know I'm a host, so I should, but I still think I have some questions. So, do you find that's a common mistake that small businesses they kind of mix the two, where they're literally, putting their hand in the till at the end of the day to cover their personal expenses, and you always hear, you can write off expenses in your business. How dangerous or common is something like that? Can you talk to a little bit about that, please?
Yes, I'll say it's very common. It's very common, and to use the term dangerous, it can be dangerous, but at the end of the day, it's about how you're going to be taxed on the money that you make on the business. So I'll say that if you're running a very profitable business and that's not being shown, then that's when it becomes very dangerous. In the long run, in the case of an audit or something like that from the IRS, you could get yourself into some very hot water. That's difficult to resolve. So yes, I do see it as an issue for a lot of people. And I'll tell you that even the bank does not want to see that, because the bank has a responsibility to encourage our clients to follow regulation or follow laws. So if the bank can see that clearly this is personal activity happening in a business account, we may opt to end that relationship. I've seen that happen many times. The bank does not want to get caught in the middle of you and the IRS when they want to collect something, and God forbid you don't have the money, then the bank is kind of left holding the bag when the IRS starts to levy accounts and things like that. So it is something that can get quite dangerous. So that's why it's important to start that framework and start that structure early. So for those on the line who have their business or is thinking about starting the business, that means you'll definitely have separate accounts. That means that your business has to be its own entity. You want to register your business with the state. You want to get a federal EIN number. And you clearly want to make sure that if you need to access funds from your business, it's done so by paying yourself a salary, paying yourself a disbursement, some type of profit sharing formally from the business that's on record with a check or some type of formal transfer from your business accounts to your personal. And if you do need to inject money, your own money into your business, you also want to make sure you have record that you are investing in your business by way of check or formal transfer that's going to be on a statement, that you'll have a record that, hey, you put your personal capital into the business as an investment. So I know those things, once again, they happen very quickly for the sole proprietor or the sole owner of the business, because there's no one else to consult with. There's no one else to reconcile with. So in your head, you're like, oh, well, I have to do this. Let me just do this transaction. It's already in my personal account. But I'll tell you, that's a very, very bad habit. And it's something that you should avoid as soon as you can. Any other questions regarding separating your personal expenses from business expenses? Okay.
I'm
All right.
sorry. I do.
Yeah.
With in regard to the Chamber of Commerce, I know sometimes we get the businesses, the members after they incorporated their businesses, and then it on Sunbees, and it's only when they're about to do paperwork and stuff we realize that they've been using their personal account to do business transactions. So how do we prevent this from happening? Because since we don't have access to them, they don't tell you exactly when they're going to start a business. And I would like to know how we can prevent this from happening.
Well, it's difficult to say because I find that the best businesses happen by accident. So a lot of people don't even think of, hey, this is going to be my business venture. A lot of times it's a hobby, or it's just a skill that they have, and one day they're doing it for fun, and then before you know it, it's profitable and it's making money. So that's a common occurrence, and naturally, it's something that you just have to recognize as soon as you can. There's no way to, I would say there's no way to prevent that. You just have to be intentional about, hey, now I'm making money and I plan to do this going forward. Let me go ahead and register a business as soon as possible. Let me set up a bank account. That way I can clearly demonstrate that, hey, I have income coming here. And then you can decide if it's something that you want to pursue. At the end of the day, I think of this pandemic, where a lot of people did have a livelihood before the pandemic, and they formally did not structure it. And in hindsight, they realized they should have, because now they don't get to participate in some of the relief funding, PPP, for example, that's out there. So if you're a startup, if you started your business in January of 2020, chances are you're in a bad spot because you didn't maybe register it immediately. But the best thing I can say is, when in doubt, go ahead and do it, because it can only benefit you in the long run. Filing fees are very small compared to the type of money you can save yourself by getting it done early.
One more question has maybe not banking. Is there a way your institution has a way of getting a survey done? Let's say, I'm not saying door to door because at this time it's very hard to do face to face. And then some people do not have access. Well, they have access, but they're not fluent in accessing social media and their email, and then resources to the via the web pages. So is there a way you guys have some program or stuff for educational? I know this is one of them that we're doing here, but we don't have access to everyone. It could be to local radio, to be something, maybe the guy know this is something you can tap into to see how we can continue this conversation behind being online live to do this, and then bring it to the radio for mostly where we have the majority of people listening that are in business for so many years are still not doing the right thing. When it comes to taxes and accounting, we have problem making this happen. And maybe this is something we can talk with Mr. Lewis after to see how we
Correct.
can, the bank can intervene to make that process.
Correct, because again, a lot of our members and the community itself, surprisingly, radio is the medium of choice for communication and stuff like that. So to Madam Chair's point, I think we can record, we can discuss having a radio session like this one, which will have a more massive and broad reach than Zoom, which is really not for everyone.
Right. I'm certainly open, and I welcome it.
Yes. Because this information is so valuable. So like we cannot leave it here. We have to take it outside. We have to.
Yes, we can certainly pursue that, and I will start that conversation through the channels within the banker to see how we can accomplish it. But I'll tell you that we are revamping. obviously we are starting a new bank, Truist Bank, but I'll tell you on the BB&T side, we have had resources on our website. And I think you mentioned that some people may have challenges with, connecting or using resources on the internet, but we did have a library of a lot of this information and a lot more, even, personal finance, a lot on personal finance, actually. So I'll certainly share that with the chamber after the fact. And like you said, we'll look at trying to get this on other media like radio.
Thank you.
Jaemair, just to add a little bit about that, one of our pillars in our bank is sharing knowledge. And I was just looking through my flyers that I have here handy. I don't know if you guys can see this one.
Yes.
It's called Financial Foundations. You're more than welcome to go to the website. It's called bbnt.com/knowledge. And there is links to like different videos where it's really to the point, is really about sharing that knowledge that a lot of people don't have, not only for the business, but also for their own personal financial activity. How to proactively manage your money, and how to make a savings account, how to start saving. It talks about a lot of different topics, how to properly manage credit, which is a huge problem nowadays for a lot of people, especially young adults. They go out there and they see that they get a credit card, and they start using it like if it is their own money, when they know that they don't realize they have to pay it back. So just to point something else to share knowledge there, and if you guys to continue, let's go for it.
Excellent. Thank you, Santiago. All right. So with that said, we will move on to our next section, which relates directly to the first section. It's about cash flow. So here we get to explore how money moves in and out of a business, separate from personal, right? So Peterson, you can go ahead and play the next video.
Welcome back. Next, we will talk about cash flow, or the money that moves in and out of your business. It's imperative to understand what is happening with your cash flow, because you will need to have adequate cash flow in order to meet your operating needs and take advantage of growth opportunities as they arise. Understanding your cash flow will also help you with day-to-day operations. A cash flow budget is a good way to track your income and expenses. Your income is the money your business makes by selling merchandise, providing services, or both. Your expenses are the cost of doing business. So, your income brings in cash while your expenses outflow cash. A cash budget is an estimation of income and expenses for a business over a specific period of time. Depending on the difference between your income and expenses, your cash flow can either be positive or negative. This budget is used to assess whether your business has sufficient cash to operate and can be a great planning tool. It can be tough to keep track of every dollar, but you can analyze where the cash is coming and going when you create a cash flow statement. Cash flow statements determine business operational trends and identify cash flow fluctuations, as well as show the business's liquidity or the ability to pay expenses as they come due. The cash flow statement should be regularly compared to your projected cash flow budgets. This helps you identify how the expected cash inflows and outflows differed or mirrored what actually occurred. If your business is more seasonal, it is best to begin with a cash flow statement that has monthly intervals. Having monthly statements provides an early warning of cash deficits or surpluses. By using the cash flow statement and the cash flow budget, you can make a well-informed management decision, such as when to purchase new equipment or when to open a line of credit to cover cash deficit periods. If you have a service-based business, it might be beneficial to begin with a cash flow statement that has daily intervals. This will keep your cash flow statement from becoming disorganized. To shorten your cash cycle, try to be paid on the spot. Offering mobile payment options, such as a mobile debit and credit card processing option, is a great way to get paid immediately. Therefore, you will not have to wait until the end of the month for the cash to show up. If you still need to invoice, do it early. Don't wait until the end of the month to send the invoice. And provide incentives to encourage people to pay early. For example, some businesses offer a small discount for paying within 10 days of an invoice date. Think about how your business collects money, makes payments, and manages money. Then, think about how you would answer these fundamental cash flow questions for your business. First, who are your customers and how do they pay you? How would you like to be paid? Second, how do you pay your bills and employees? How would you like to pay your bills and employees? Third, how do you manage, invest, and protect your money day to day? Fourth, how would you like to get paid? How would you like to pay your bills and employees? Let's spend a few minutes looking at how to manage your cash flow, as well as filling out a sample cash flow statement with your coach's help. After you have prepared this statement or one similar to it, you can then focus on each of the line items and begin the process of improving them as you deem appropriate. In this section, reference your worksheets as we talk about some ways.
Okay, so when it comes to cash flows, I think a lot of people, uh, like I was saying before, lack of knowledge on how to properly manage the inflow and outflow of the money on their own business. And sometimes due to that fact is why a lot of businesses don't make it to the next level. Okay. So in this short video, you guys hear the presenter. I mean, he's talking about income and he's talking about the expenses. So that's exactly how the majority of businesses work. They sell the service or product and they collect money from their clients. Okay. And with that money, they start paying out all of those expenses. Now, that cycle is called cash flow. If you guys want to open the link that's on the chat, the workbook, you can feel free to download it, and it goes like in detail if you want to answer the questions. Which number one question is collecting money. Okay, who are your customers or clients, and how do they pay you? Because if, for instance, you give them credit and you give them the opportunity to pay you in, like, I don't know, 30, 60, 90 days, sometimes even 6 months, then that's a great opportunity to discuss cash flows. Because if you extend that to your clients, you have to make sure that you have the knowledge and understand that you're not going to recover that money until a certain period of time. So how are you going to keep, let's say, buying from your suppliers the products that you're selling? In that sense, we recommend a lot of different things, like a credit card, for instance, to finance your purchases, and then you don't only see the benefit of the payments that you can pay them in different, I mean, in a certain time of period, but you can also benefit for the rewards that credit cards offer. For instance, on another note, we also have line of credits. That's why the first topic on a video before, it was covering how important credit is when you have a business. Credit is the most important thing to manage cash flow. Why? Because if, let's say, you have a line of credit for 20, 30, $40,000, you have enough money there to, let's say, buy the products that you need, and then once you collect the money from your clients, you pay it back to the line of credit, and then you will see the profitability of the business. The second question that you have to ask yourself is making payments. How do you pay your bills and employees? Okay, because usually a startup business, it's only one person, maybe two. Uh, you have to make sure, like Jaemair was saying at the beginning, it's really critical and important to separate personal from business. You have to make sure that the business is self-sufficient to pay for the employees. And you have to make sure that you, as an owner or as a part of the business, pay yourself. Okay. Uh, and in order to do that, then you have to make sure that you keep tabs on it, by having a really nice control. That's when our partnership comes in place, because we can refer you to ADP, which is a great company that we use and that we partner with, and they have all the compliance and regulations that will save you from any troubles with the IRS, for instance, like Jaemair was talking about before answering a question. And then the third question that you had to ask is about managing, investing, and protecting your money. Okay, so in this case, how do you manage that money? How do you, let's say, you see that you're getting little by little, your business is up and running, and you start seeing that there is more money staying on your checking account than the one that is just going out. So that's when you had to start thinking about, okay, is it a good time to start pulling money out for myself? Or is it a good time to invest in higher equipment, depending on the business type? Or let's say a transportation company, is it a good time to buy another truck, maybe try to expand the business? So that's when you start thinking about that next level. So when it comes to cash flow, I didn't want to cover how do you collect the money, because that's a topic that we're gonna talk about in the next video. But we also have that possibility of merchant services, which is like really quick. If you offer to your clients to pay you with a debit or credit card for a small fee, obviously, but you're gonna see the money available on your account for you to be able to use, and it will be liquid there in less than 1 or 2 business days. So I don't know if anybody has any questions so far, or if we can continue with the videos, but I'm here to answer any question.
Thank you, Santiago. I think that was extremely helpful. Again, as you know, we see some of our business owners struggling with that concept. And to your point, and they can always get it after the meeting, that workbook will be very helpful in putting together that cash flow analysis that's so critical to businesses. So yeah, thank you. We'll make that workbook available to our members.
Yes, the workbook is actually in the chat for those who have access. You can download it now. There is a cash flow statement worksheet on page 7 of it. I encourage everyone to exercise it. It covers 5 months of activity in your business. So if it's something that you've never done before on your business, it will help you see your business almost from the outside, in a sense. That's the revelation that I find that a lot of our clients have. At first glance, there's probably about 30 or 40 line items on it. So it looks a bit intimidating, but I want everyone to understand that it's something that you have already done, I'm sure, in your personal life. If you think about your monthly expenses versus quarterly expenses versus your annual expenses, these are all expenses that you have managed already in your life by managing your cash flow, so to speak. So just think of how you manage your monthly bills, maybe with regular income that you receive. For the property owners out there, maybe you look at November when you have to pay your property taxes. You probably save all year, you set aside money for that. You keep it in the back of your mind all year long that, hey, you got to have this money ready by a certain time. So that's all really a cash flow statement does. It just lets you know when money comes, when it goes, and helps you identify different buckets that you should have for your business to make sure that you know what the outcomes are and you don't have surprises, and you can stabilize your finances using the data that you already have access to, but you just may not have analyzed or processed it out. So very useful tool. If there's no other questions, we will move on to the next section. So Peterson, go ahead. Thank you.
Is to optimize your cash flow. You can start improving your business's cash flow by reducing your costs and reviewing your pricing. Determine your biggest expenses and look at ways you can cut costs. Even saving on small expenses can add up to big savings year to year. Operational costs, such as utility bills or mailing costs, can be a good place to look for ways to save. Another place to start is optimizing your accounts payable and accounts receivable processes. Outsourcing time-consuming tasks such as payroll can save your business a lot of time and money. Also consider getting rid of outdated and unused equipment, even if replacing equipment seems daunting. Having the right technology will streamline your processes. You can also boost your cash flow by reevaluating the pricing and your products or services. It might be time to increase prices, as it widens your margins and frees up cash for business growth. As a business owner, you should always be seeking to increase prices over time, so that you can improve your profit margins and keep up with inflation. You will have to find the right price point that helps boost your cash flow while not resulting in lost sales. But a cash flow statement isn't just useful for you. Business partners, customers, vendors, and lenders pay attention to a company's income and expenses to determine elements such as profitability, cost management, and liquidity. Keeping good records, like a detailed cash flow statement, will also help you with taxes. Make sure you're saving receipts, canceled checks, recording all business expenses, and not underreporting your income. Take some time to talk with your coach if you have any questions.
We can continue with this one, Peterson. Thank you.
Welcome back. Next, we'll take a few minutes to discuss how merchant services can help your business increase sales and streamline your cash flow. Merchant services providers can help you find the right payments processing technology to keep your business growing, increase operational efficiencies, help with money management, and lead to better customer experiences. As online payments, credit and debit cards, and contactless payments gain popularity, make sure your business is equipped with the right tools and technology to accept payments all the time, anywhere. Today's consumers enjoy ease and convenience, and as a business owner, you should provide them the flexibility and freedom to pay for your services and products the way they want to. Merchant services providers can help you keep up with the constantly changing world of payments by enabling your business to take swipe, chip, and contactless payments from your sales counter, tablet, mobile phone, or website. Consumers want ease, but they also want safety. When customers hand you their card, they expect you to safeguard that data. Data security offerings protect both your business and your customers' sensitive information. Cash and time are two of your most precious resources, so spending some time organizing and optimizing your cash flow will help maximize both.
Well, this is what I was talking about before. Merchant services, it's pretty much something that a growing business should offer for their clients. I know that the traditional way is with checks and cash, and it's simple and easy for some, but nowadays with our new normal, I think that a lot of businesses have to take that route and start looking into these merchant services because first, you are protected. Second, you don't have to be going every day or every other day to the bank to make cash deposits and check deposits, but you will have the more time to keep doing what you know what to do on your business, and you just have the pretty much the comfort of having the business with it could be a little machine that you use, or it could be a little square that you connect to your tablet or your phone. I can give you an example. I had a client on transportation services that they sell frozen shrimp, and he when he started offering merchant services for his clients, he started seeing a growth in his business of more than 20%, because a lot of the people that he was going to, they were asking him, hey, can I pay you with a card? Hey, can I pay you with a credit card? And sometimes he had to say no to those clients, and then those clients were going to another business that was offering that to them. So he found it really helpful when he shared that information with me, and then we signed him up for merchant services. You start seeing the increase on his revenue on his business. It's a great tool. Is nowadays, especially with the pandemic and everybody trying to do everything online, that's the safest way to conduct business. So I encourage everybody that owns a business to think and consider going for merchant services. Again, we can discuss it further at the end. You can give us a call. Either Jaemair and I can. We're more than happy to welcome you in our locations to discuss further if you have encountered any need of this type.
Yes, I'll just chime in and say that a lot of my clients I've seen in the past, they underestimate the power of having access to accepting credit cards from their customers. I think there's a statistic out there that says that typically businesses see anywhere from 25% increase in sales on average just by having the ability to accept credit cards. So, that is just another tool by which you can grow your business. And it adds a ease and security to the transactions you have. Many people shy away from merchant service solutions because they're afraid of the costs. They think that their customers will easily be able to reverse the charges. And at the end of the day, those are possibilities. But if you're running a sound business, chances are disputes between you and your customers are few and far between. And even so, as long as you've done your job in providing the service that they agreed to, and you've done your job in staying compliant and maintaining proof of the transactions, signed receipts, collecting IDs, then chances are the risk of having chargebacks where you lose your money is relatively low. So the gains will outweigh the cost of the service and any risk you may have in chargeback. So, and it allows you to, once again, it goes back to managing your business cash flow. It allows you to clearly identify, what sales you have, and makes it easy to run reports and everything else like that. So merchant service solutions is something I highly encourage. Our bank does have our own merchant service company, so we're very competitive in that space. The last piece I want to say is merchant service processing is an industry that I find that it updates very often. I would say every 3 or 4 years, there is a new machine, there's a new security measure. And so you always have to update your equipment. Yes, there may be some expenses involved with that, but it's only to stay ahead and stay up to date with the new security protocols, because, fraud is something that never goes away. And it's a cat and mouse game where our industry is always updating our security measures, and then the fraudsters kind of figure that out, and then we have to move on to the next thing. So just know that if you're already using credit card processing, definitely upgrade to the latest equipment and services available, because you're only going to protect yourself and reduce the risk in losing money in fraud cases when you do so. So just wanted to point that out, as I see that out in the market. And
Jaemair, let me add a real live consumer experience to businesses not accepting credit card. There's this local restaurant that I tried once. I walked in, bought a bunch of food. It was recommended to me, but when it came time to pay, well, we don't take credit cards. So here I am holding all this food. I have no cash, like most bankers. We don't walk with cash. And I had to put the food down, go find an ATM machine and bring back the cash. And I went there again, and I forgot the whole thing about not taking card. And basically I'll never go there again because it's inconvenient. I don't know how much I'm going to spend. When I get there, I order. So not having that flexibility of payment for your consumers, I think is a big negative for businesses. It's a big negative for businesses in this day and age.
I totally agree. Totally agree with that. I mean, I think we can go on and on about the scenarios there because, like I said, those who like to handle cash, if you haven't realized it yet, you realize soon that is a burden. It's an expense. It is not safe. It is a liability. So the sooner you can step away from that, the easier you're going to make the transition for yourself. Because as time goes on, it's just going to be a drag on your business. So great point, John. So with that said, if there's no questions, we will move on to the next section.
Let's resume our discussion on ways to grow your business. Whether it's for startup costs or capital for expanding, eventually most businesses need to borrow money. We spoke earlier to the benefit of having a business credit card to use for business expenses. Now, let's discuss the potential benefits of having a business loan or line of credit. Of those businesses that seek credit, many seek loans or lines of credit. Loans and lines can help accelerate your business's growth, overcome problems in cash flow, and they will not dilute your equity. Business loans and lines of credit function like any other loan, with the condition that the funds are used for business-related purposes. A business loan or line of credit can be used for a variety of purposes: purchasing a building, financing short-term operating needs, buying new equipment, consolidating existing business debt, or simply ensuring convenient access to funds when you need them. Let's discuss the difference between a term loan and a revolving line of credit. Term loans carry a fixed term for a specified dollar amount. Businesses agree to repay the loan with a set payment schedule. This is a good option because you can predict your monthly payment and better manage your monthly cash flow. In most instances, your interest rate will be lower with a secured term loan than with a secured line of credit, or an unsecured credit option such as an unsecured business line of credit or business credit card. Using a revolving line of credit provides the money you need when you need it. Most times, a line of credit is used to cover short-term expenses, like payroll or inventory. With a business line of credit, you're approved for a specified credit limit and interest is paid on the amount that you use. It is a revolving credit line, so once you repay the amount you have used, that amount becomes available again for future use. Before applying for a loan or line of credit, it's beneficial to evaluate your creditworthiness. Your credit report is documentation of your credit activity, your credit accounts, and how responsibly you have paid them over time. A good credit score, typically a FICO score above 700, can make getting a loan or line of credit easier and help you qualify for lower interest rates. But don't worry if you have a bad mark on your credit report. You still have options. Getting a secured loan or line of credit is one way to boost your appeal if your credit score is less than ideal. A secured loan or line of credit allows you to pledge an asset as collateral, and therefore gives some security to the lender. Offering collateral, such as accounts receivable, equipment, vehicles, personal home, is a way to secure a loan. The type of collateral pledged is typically tied to the purpose of the loan or line of credit. For example, there are equipment loans. With equipment loans, lenders typically finance most of the cost of your needed equipment if you are able to justify the cost by the additional revenues the equipment will provide. Unsecured business loans and lines of credit are supported by your creditworthiness and are obtained without the use of any collateral. Another type of borrowing option you can pursue is a U.S. Small Business Administration SBA loan. As an SBA preferred lender, BB&T partners with the SBA to offer you a variety of flexible borrowing options, which can make it easier for you to repay your loan and put more cash back into your business. Additionally, SBA borrowing options reduces the risks for lenders and in turn makes it easier for businesses to get loans. Benefits of SBA loans include lower down payments, longer terms that provide a lower monthly payment, and competitive rates. Before agreeing to any loan, Be sure that the terms of the business loan align with your expected cash flow and allow you to meet the payment terms on schedule and in full. Meeting the terms of your loan will allow you to continue to establish a positive credit history in your business's name.
Okay, great. So yes, business credit. I know it's a hot topic for a lot of people. Business credit can be the life's blood or the oil in the engine of your business. Oftentimes it means a difference between having a small business and a big business because it allows you to gain access to capital and to scale your business if used responsibly. And I do want to highlight that part, that last graphic in the video where it shows that you need to align your business credit, also known as debt, with your cash flow. That is critical. I would say that because it is a tool. It is a tool, much like a knife or a hammer. You can use it to do great things, or if you mishandle it, you might hurt yourself. So that's where, going back to our previous sections, the cash flow statement, I encourage everyone to take that and utilize it and make it a practice. In regards to business credit, I also encourage everyone to build business credit as early as possible, whether you anticipate or whether you know how you're going to use it or not. Because by the time you identify the need, it is a little bit of a process to get it. If you're well qualified, it can happen very quickly. But if not, you may have to do some work before you apply at the bank, or maybe you apply with a not so positive outcome and you have to go back and regroup. And in the meantime, the opportunity that you saw, it may be expiring, it may pass. So that's where I say that business credit is for everyone, even if you're not sure how you'll exercise it. So by that, I mean, at the inception of your business, you can start with something small, like a business credit card. That is a ground floor of business credit. And it's something that, the door is open for that through your personal credit. So let me kind of give a broad idea that there is no business credit without a good personal credit. So if you have not taken care of your personal credit, that is your very first step. The video mentions a score of 700. I will agree with that. That is a good score, but I'll tell you that current day in our market, banks have kind of tightened or asked more of our clients in terms of credit qualification and credit scores, because it's perceived that we're in a very risky environment now due to the pandemic. Sales are down everywhere. Supply chains are impacted. So many businesses are suffering. And we know that some may not survive, quite honestly. So we're very careful about how we extend credit now. So understanding your cash flow will help you realize what type of credit you want to use ultimately. The video talked about the two main types of credit, which is credit lines, also known as revolving credit. So examples of that are the credit card that I mentioned, or a true business credit line. The difference between the two is credit cards they usually include one of the payment networks like Visa or MasterCard, where we use them to transact the payments, and you have the benefits of Visa purchase protection, things like that, rewards points and all those things. So that is kind of the low-hanging fruit as far as credit goes. And you can get that with a brand new business. You can incorporate your business today and have a business credit card by next week if you have good personal credit. A business credit line from the bank, however, is a little different. It's a little bit more cost effective in some scenarios than a credit card. Rates tend to be lower, but the criteria to get one are a little bit higher. And it does require a little bit more analysis on the business side. So we may, inquire a little bit more about how the business does cash flow. So that's why, once again, we have to revert back to the practice of identifying and understanding your business cash flow. The other type of business credit would be business term loans. That's your traditional loan. When people think of loans, they think of getting a lump sum of money and paying it off over time. And that's how we pretty much define a term loan. Term loans could be unsecured, which, that's where you kind of have middle of the road or higher rates. Or it could be secured with collateral such as maybe the vehicle for your business, or maybe a piece of real estate, or maybe even the heavy equipment that you have in the business. So depending on your need, the repayment schedule that you'll need to have based on your cash flow, that is how we can help you figure out the bank, or you can kind of figure out for yourself what type of loan is it that you need for the business. Super important that you identify this with the purpose of the loan, because you don't want to get caught in a situation where, for example, you buy a piece of equipment on your credit card because, yes, you have a high enough limit, you can afford it on the credit card, so to speak, but you don't have the cash flow to repay it off in a reasonable amount of time. Let's say 1 month, 2 months, or even 6 months at worst, so to speak. If you have a long-term borrowing need, that is not something you should do on a line of credit or a credit card. That's something that's going to get very expensive because interest rates tend to be higher on those products, and interest is charged on a regular basis monthly. So it's hard to make progress in paying off your debt if you're stretching it over a long period of time on a product like that. Ideally, if you're going to purchase heavy equipment or a vehicle, you're going to want a term loan over the course of a few years. You have the advantage of saving yourself on the interest. You have the advantage of knowing what to expect because you'll have fixed interest in most cases, whereas the lines of credit will have variable interest rates. And while those interest rates are the best we've ever seen today, we don't have a guarantee that that will be the case 5 years from now, or even 3 or 2 years from now. So especially in our current market, in relation to the pandemic, these are very uncertain times. So trust and believe that we may be looking at a very different scenario down the line, and it could be for the right reasons. As things get better, the government may say that, hey, we don't need to have rates this low anymore. So we can raise rates to kind of manage how the economy is performing. And if you're unprepared for that, then you have a major problem because your cash flow could be turned upside down if rates change on you quickly. So very important to utilize the right type of credit at the right time for the right purpose. I know I said a lot there, but does anyone have any maybe experiences they want to share or any questions about using business credit?
No, Jaemair, thank you. That was very important. I think that's a major mistake that a lot of businesses, they confuse the type of credits when sometimes a term loan is more appropriate for long-term investments versus a credit card that for a short-term objective. So I think it's important for businesses to understand, and you'd be surprised, big businesses, small businesses, they all sometimes make the same mistake as to the type of credit they need for the situation that they're encountering. So thank you again for that important distinction. Like each situation requires a different credit, and they should talk to bankers. And if it happens to be BB&T bankers, hey, why not? Thank you.
So one last thing, not an effort to sell anyone on trying to book a loan or anything like that, but I do want to reiterate that we are in a very low interest rate environment, and I'm from the Caribbean. I'm from Jamaica, where people buy things in cash and they pay it off, and I'm sure we have folks here that may understand what I'm talking about, whether you're from Haiti or other islands in the Caribbean or other countries for that matter, because honestly, no one uses credit like the United States. But if you've never used it before as a tool, or if you've shied away from it, or if you've been considering it and wasn't sure if it's a good idea, now is the time to really get your questions answered, because you have the opportunity of a lifetime of locking in a very low rate, whether it's, I know we're talking about business, but if you did want to purchase a home, or if you're in the real estate business, or like I said, any type of term loan for that matter, if you do a loan this year, this is a rate that will follow you for the full term of your loan. So in the case of real estate, that could be 30 years. That means that you get to borrow money today, and as things progress, as rate changes, as inflation happens, you have the benefit of a 2021 interest rate. So certainly encourage everyone to get educated on that and look at your personal credit and prepare yourself to make those moves, because these are unprecedented times. We've never seen it before. And, you know, in terms of the pandemic, I'm hoping that we never see that again. But these interest rates are temporary, and that's evident by all the measures that our government is taking to get us out of this. So just wanted to throw that out there. Any questions or other comments around business credit? Okay. All right. With that said, we will move on. Peterson.
Moving along, let's take a few minutes to discuss one of the most important things you can do as a business owner. Protect your business and your employees. Managing and growing a business is difficult enough without having to worry about not being covered if unforeseen events occur. It doesn't matter if you're a product or service-oriented business. Every business faces potential risks, from fire to cybercrime to bodily injury, that can be mitigated with insurance. Every business is difficult and has unique needs, so you should work with an insurance professional to understand the right solutions for you. However, today we will provide an overview of common types of insurance that you should put in place as soon as possible. General liability coverage is a must for all business owners. This type of insurance helps you manage risks and protect your business from another person or business's claims or lawsuit. These days, even minor mishaps can lead to large lawsuits. That's why no business can safely operate without liability insurance to protect its assets. Whether you rent or own your space, commercial property insurance is one of the first types of insurance you should look into when you launch a new business. This insurance can cover everything from your building and inventory to your signage and furniture. Commercial property insurance helps safeguard all your company's property against the risk of loss, theft, or damage, and it can protect you against business interruption, loss of income, and loss of the use of your property. As with many business owners, your sole source of income may come from your business. In addition, you may have personally guaranteed your business loans. In the event of a tragedy that takes your life or leaves you disabled, your business may have difficulty continuing and your family might be left without a source of income. Make sure you and your family can realize the full value of the business you've built. There are many affordable, straightforward life and disability insurance options to guard against this risk and protect your business, your employees, and your family. These policies can provide immediate funds to continue the business, pay off loans, and/or replace years of lost income for your family. If your business has employees, you should also have workers' compensation insurance. Workers' comp injuries already cost businesses in terms of lost productivity, and without insurance, those costs would be compounded by employee medical expenses and missed wages. The best workers' compensation solution should be an affordable benefit that protects both your business and your employees. There are many other types of insurance to consider, such as health insurance, commercial auto insurance, and business interruption insurance. The types of insurance coverage you need and the amounts of coverage will vary depending on the type of business, the size of the business, and the amount of risk your business is willing to assume.
Jaemair, this is one of the most underutilized aspect of businesses that small businesses don't consider. And I think at times they don't understand how critical this is, because any little thing, theft, somebody slipping and falling in their business, it's just an employee getting hurt. A lot of small businesses don't understand how critical insurance is. Even today with cyber fraud and what have you, which there's insurance for that, how exposed they are and how important, yes, it's a cost, how important insurance is to the survival of their business. Can you, I know we're running up on time, but can you really, you or Santiago, give us a view, your views and your experiences in this field?
Absolutely, Jane. I was just going to talk a little bit about what you saw in the video. Every business requires at least a general liability insurance. Okay, a lot of startup businesses, I know that they use or utilize their savings, and they want to cut a lot on their expenses, but they don't think and realize that by having a business, they also have a huge liability, because they can be claims against them, they can be lawsuits against them, and if they don't have enough coverage, they can be, I mean, it can be really dangerous, and they can go out of business like this if they don't have the proper coverage. So this is a really big topic, I would say, one of the most important ones. And unfortunately, a lot of people, usually business clients, they don't see it like that. They don't see the immediate need of having it, not until they have a situation, unfortunately. And we always say, oh, I should have done this before, or I should have asked more questions before. So now is the right time. As soon as you can, meet with one insurance advisor. A lot of people don't know that we, on our bank, Truist, it's one of the 5 largest brokerage insurance in the United States. And we are really competitive out there. We can give you a quote in just a matter of minutes, and you can kind of realize what the coverage is going to be, and the peace of mind that you as a business owner will have, just walking in your business every day, knowing that even if you have a claim, even if you have a lawsuit, you're going to be covered for those things. Another topic that was discussed is commercial property insurance. It will safeguard you against any loss, because that's an asset. And if you own your property, or for your own business, you don't want to lose that asset. And lawsuits can go against those assets if you're not properly covered. So that's a really important topic as well to consider. And just to finalize, I know that we're running a little bit out of time, but something that I would like to share on my personal experience. When I was on my, I don't know, 24, 25 years old, I was offered life insurance, and I'm gonna be honest with all of you. I thought to myself, like, that's a waste of money. Like, I'm not gonna just give out every month $30, $40.
You're 24 years old. You're invincible. You're not gonna die. What do you need life insurance for?
Exactly. So then time start happening. Then my first boy was born, and I think I started to getting a different mentality, and I wish I could have done that when I was 24, but unfortunately it took me until I turned 28 to do it. And now I was looking at the same policy, but $10 more. So that's something that, especially for young adults, it's really important to start thinking about it, because you can lock in the rate while you're young, and it will be way cheaper, and you can keep paying for it. A policy that is $30, maybe $40 a month. I mean, who will spend that? That will be just one less day that you're not gonna go on a regular times to, let's say, to the movies or to have a nice meal out there. Instead of doing that, use those $40 or $50 to pay for your life insurance coverage. Like I was saying, on my personal experience, it took me having my two kids to realize how important it is. And I can tell you that I can go and sleep really nice at night, knowing that if God forbid something were to happen to me, my family it's really covered for a lot of expenses, knowing that I'm the main provider to my household if something were to happen to me, like I was saying. So those are things that I know a lot of people don't like to talk about, but it's really important to discuss, and it's really important that we switch our mentality in that sense, and we look at the important side of it. We don't have our tomorrow by. We don't know what's gonna happen tomorrow, especially nowadays with the pandemic. I mean, you can be the healthiest man in the earth.
Yeah, email address.
All of a sudden you get the COVID, and then 2 weeks after, you can find yourself on a disability or with a really, really critical condition, health condition, that will impede it for you to go to work. So those things are really important. Going back to the presentation, workers' compensation is another topic that is really important to have, which it protects both the employees that you have and your business. So I think that that'll be kind of my final comment there, to start wrapping up. Think about it, because it's really important, and don't keep not wasting the time, but don't keep waiting more and more until you have a need, because that's what insurance is for, to prevent that to happen, to be covered when that need happens. So I hope that you guys take our presentation and everything that we have discussed so far, and you learn a little bit of a lot of it, because it compiles pretty much everything that a business does, and that a business have to make sure it has to be a successful business.
I have a code. Thank you so much. It was so wonderful. You got my attention. I enjoyed it. And then you were phenomenal. Ganu, and for you guys, I would like to know if we can take this, instead of for someone to listen to the entire presentation, we can get the little piece there of cash flow, opening the business. If we can do little pieces of the video every week, every so often, for people to see and then to do. If they don't want to listen to everything, one piece of it will be good, and because it was like so much and then so valuable. I don't know what your feedback on this.
Yeah, I am. I'm open to that. We can have a focus session on any one of those subject areas.
It is so perfect. Like we can do it via social media when we're sending our weekly blast during the week on Mondays. We can add one little thing in there from you guys, and then that's also exposure, and then for the bank, and then for us, and then for you guys. Yes.
Certainly. I'd love to do it.
Okay. So Peterson does have the clips?
Yes, he'll have access to it. We have it on a YouTube channel.
Okay, perfect. I have to go, Ganu. Thank you so much. You guys were amazing and beautiful. Thank you so much.
Thank you.
Thank you, Madam Chair. And we're going to be on this point. I think we may have some more slides, but we're going to, again, this is an educational session. We will have in more breakfast and learns. And again, this will be posted on our website, and it will be on YouTube. But Jaemair and Santiago, any words of wisdom, any final nuggets and again, on behalf of the Haitian American Chamber of Commerce, we want to thank you for doing this for us, and we truly appreciate your participation and your wisdom and knowledge and education and experience to small businesses. Any more words of wisdom or anything else you would like to add?
Words of wisdom. I'll tell you that I'm still quite young, but I do remember our last economic downturn, and I can say that I even have clients that I had at that time who are doing far better today. So I just want everyone to know that this is just a test. It's a test of your staying power in business. Navigate these waters carefully, and feel free to contact me, as we have many tools to help you with that. I truly believe that if you're able to succeed and keep your business alive, or even get some growth out of 2020 and 2021, you're going to be in for tremendous winnings in the years to come. So I can be a resource to you. Please feel free to contact me, and I'll be sure to share the best information that I have available as it becomes available, because things are changing so quickly. So it's so important that you stay up to date on what's happening around the economic relief from the government and the changing that's happening in the finance industry, because there's lots of opportunity out there that was not in existence 8-9 months ago. All right, so looking forward to hearing from you guys in the audience.
Thank you, Jaemair. Santiago, any thoughts?
I think I just want to thank you guys to invited us. I feel really happy when we do this type of things, because like I was saying at the beginning of the presentation, sharing knowledge is something really powerful. And since Jaemair and I and you also, Jen, are in the banking industry, we get a lot of knowledge, and we get to see, like, from a different perspective, how different businesses either grow or they go down. And we kind of get that as a background, and we can give a nice advice to everybody that is willing to listen, and that is willing to think about all the little topics that we covered today, which is pretty much compiling everything that a business should be doing, or a successful business should be doing. Nothing else, nothing major. I just wanted to say thank you, and I hope that it doesn't stay here. I hope that everybody that will watch this video have a lot of questions, and they can reach out to either Jaemair or myself, and we will be more than happy to assist them and help them and provide them with that friendly advice. I would say we're not looking here to sell any banking products. We're looking here to share that knowledge and to encourage everybody to keep growing, and that's what fulfills our purpose as bankers. That's it. Thank you again.
Well, gentlemen, thank you, and thank you to the audience, to the participants. Again, this will be on our website. We will rebroadcast it on YouTube. Again, any questions, call the chamber. We will have our contact information for Mr. Lewis and Mr. Lopez. Once again, folks, thank you so much for participating. And if you have any questions, please reach out. In the chat, Jaemair Lewis's information is on there, as well as Santiago. But we again, contact the chamber, and we will connect you at will. Once again, folks, thank you so much. Have a great day. God bless. Bye.